Good afternoon, everyone. How's everybody doing out there? Welcome to another edition of Talking Business. I'm your host, Sage Lee. You can just call me Sage. Today, there's a lot of things to discuss. There's a lot going on, both on the political side as well as in the markets. Obviously, I think the big news for this evening will be Biden's State of the Union address. I think there are several things that he will be touching on that's going to be vital to not only the economy, but whether or not, well, I'm sure he's going to run. He may announce that he's going to be running tonight. We don't know, but that's potentially the news that may be coming out. So Wall Street Journal says Biden expected to discuss economy, foreign policy, and State of the Union address. The speech comes as the president is expected to soon announce his bid for re-election, adding to the stakes. Unlike previous years, he will be addressing the divided Congress after the Republicans won back the House during the midterm late last year. Obviously, Biden is going to be in a much more difficult position. This is definitely his lame duck year, and his speech tonight will set the tone for the rest of the summer, or the spring and the summer, going into election time later this year. Besides that, there are so many things going on market-wise with regard to the economy. The U.S. trade deficit has also hit a record high this past December of 2022. Let me see that those numbers are not looking good. Let's see. U.S. trade deficit hits record in 2022. The U.S. trade deficit rose 12.2% to $948.1 billion. So that's just, I don't know, $52 billion away from being $1 trillion in deficit worldwide. The widest gap on record as the U.S. continues to deepen or depend heavily on imports from other countries to meet domestic demands. This year, I think we will probably crack the $1 trillion deficit mark, simply because, back in the 80s and the 90s, outsourcing was the big thing. And we moved manufacturing overseas to Asia, China particularly, India, and those economies grew. And over time, our economy became more dependent. So until the U.S. built back a lot of those manufacturing sectors that we lost, this deficit, I believe, will continue to go higher. So that's going to be a big issue, and we'll see how Biden addresses that deficit, that trade deficit issue, whether or not he brings it up in any of his State of the Union address tonight. Excuse me. SoftBank is losing big revenues. This past quarter, SoftBank lost nearly $6 billion in the quarter as investment suffers. SoftBank Group, it's a tech investment vehicle, posted a loss of nearly $6 billion, leading to the companies reiterate its conservative approach. They're looking, obviously, to stabilize their situation. And let me just open up the article, see if there's more to it in terms of the direction that they're looking to take. So Masayoshi, the son, chief executive of SoftBank Group, Tuesday marked the first quarterly earnings presentation in years that Mr. Sun didn't attend. So the chief executive did not show up to the past annual meeting. A year into the tech rout, Tokyo-based SoftBank is still taking hits from the peak of the market spending spree. At the top, as the company on Tuesday posted a 5.8 quarterly loss on its startup investment funds division, known as the Vision Fund. The bulk of the company's loss, basically, let's see. The company is losing a lot right now based on that speculative investment fund that it started. I think they're hoping to compete with Vanguard, but at this moment, the Vision Fund is not looking good at all. All these different major events are taking some toll overall on the market, even though today the market did close up positively. The S&P closed up 1.29%. NASDAQ closed up at 1.9%. The Dow Jones closed up 0.78%, almost 1 point. Crude oil is up significantly, 4.5%. The 10-year yield on the bonds, those of you who are looking at mortgages, that's down 3.67%, but that's not going to have no real effect in your pocket simply because the Fed fund rate is where banks are going to be setting their interest rate as it pertains to real estate loans. So that's not really going to have a big effect on you, the consumer. In other news, in terms of tech, Crypto Slate made some major announcement today. Ironically, it's a double-edged sword because they made both positive and negative announcements. And I'm going to bring that up so you guys can take a look and see what's going on. Okay, so let's see. Binance suspends US-based banks transfers. Binance said its users could use all other methods of buying and selling currencies. Meaning, if you're going to have accounts with Binance right now, you need to have multi-currency accounts. If you have accounts only in dollars, less than 100,000, you will not be able to do any selling. So they've suspended any trading with regard to transfers concerning the US dollar. Binance is temporarily suspending US dollar denominated bank transfers as of February 8th. That's starting tomorrow, according to an email statement sent to Crypto Slate on Feb 6. The firm said it was notifying affected customers directly. A Binance spokesman said, it's worth noting that only 0.01% of our monthly active users leverage US bank transfers, but that we were working hard to restart services as soon as possible. The exchange added that its users could use other methods of buying and selling crypto, including bank transfers in fiat currencies such as euros. On January 23rd, Binance said its banking partners, Signature Bank, would stop processing crypto transaction worth less than 100,000. So if you're small accounts, it's going to affect you with regard to being able to transfer using US dollar. But if you're an institution or you're a heavily high net worth investor with over 100,000 and Binance cryptocurrency, you still will be able to trade over 100,000. At that time, the exchange added that the decision would affect the bank's crypto clients. So this is a temporary situation. Binance is looking to resolve it. I think you can see a conclusion to this US dollar transfer issue resolved shortly. Could be a week, could be days, could be another 30 days out. However, on the good news side, Binance made a good investment opportunity that was recently announced as well. Binance acquires South Korea-based Copax. Copax is an asset-based exchange, and it's basically for big players, right? The funding for Copax acquisition was made from the $1 billion Industry Recovery Initiative, a co-investment project led by Binance. Leading crypto exchange Binance has acquired a major stake in South Korea-based Copax exchange, Bloomberg reports today. Binance has been working to re-enter the South Korean market since its shuttered operation in 2021. As a result, it reportedly completed the due diligence needed to acquire Copax on January 2nd. Binance has acquired a major stake, or a majority stake, I should say, in the Copax exchange, according to Bloomberg. The deal saw Binance purchase about 41.2% of the company's stake from its largest shareholder, which is currently Mr. Lee Jung-hung. Funding for the purchase was made from a $1 billion Industry Recovery Initiative, and it's a co-investment project led by Binance, reported by Bloomberg. So they're definitely shoring up their exchange part of their business. They're strengthening there to be able to trade in different currencies as it pertains to the blockchain industry. I think overall, Binance looks strong still. They're under pressure, but as an investor, more than likely, you can take advantage of this opportunity that presents itself. On another positive note, Crypto Slate also reporting AI token, ARI, up 60% in the last 24 hours. ARI, a native token of iWrite, has posted gains over 60% in the last 24 hours and over 900% over the last 30 days. Now, don't think that you've missed the boat on this, because as we get down to actually looking at the value of AI tokens, there's still an investment opportunity for those of you who may have wished that you got in on Bitcoin back in 2011 and 2012. The AIRI token price has rocketed over 60%, stated that earlier. However, as you can see, and let me blow that up for those of you who may want to take a closer look at what I'm looking at. Okay, one second. Let's see here. Let me scroll that screen so you guys can see it. I apologize. Let me bring that screen up for you guys to see. Give me one second. Let me just bring up that screen so you guys can see exactly what I'm looking at. Okay, as I started to explain earlier, the token is trading right now at 0.0088 cents, or 0.8 of a cent, or 0.8 of a cent. So a small investment right now of $1,000, if you were to get invested in this would be obviously a speculative opportunity, but a move to $1 on this token will put you well over, you'd be owning 100,000 tokens. So that will put you well over $100,000 for a $1,000 investment. If you've got, if you've got speculative capital, this is a good entry point, I would say. It showed consistent movement over the past 24 hours. It showed consistent movement over the past 30 days, a 900% movement. There's positive news coming out. Let me continue. It says the all in one NFT creation and copyright management platform has seen significant attention over the last 30 days, posting over 900% increase in price. And AI interest soars in 2023. AIRI market cap and interest have soared in light of the increased interest in artificial intelligence. Chat, GPT, and other AI-based automation acting as catalysts. ARI or AIRI tokens are earned by creators from their creation list on the AI Right NFT marketplace. Users can generate NFTs uniquely from text and watch as AI model converts that text into imagery. So obviously a lot going on in the artificial intelligence market. Chat GPT is definitely creating a lot of buzz and interest in this AI technology and what are some of the possibilities. So there's lots of growth there overall. And I think with renewed interest, those type of interests come with big dollars. And with big dollars, we could be looking at a significant movement in various types of AI projects. So I will be keeping my eye out for anything that I find that is unique that I can bring to my audience so you guys can be aware. And you can tap in and look to take advantage of any potential opportunities that can be beneficial. Another investment that I've noticed in the market that has been moving and has both positive and negative news is BBBY, Bed Bath and Beyond, the household goods retailer. As you know, they sell basically everything for the home. I would see this as a long-term play coming back. The stock is traded as in a 52-week low at $2.88. I think it closed today. Let me just double check. Closed today around $3.08. So this definitely was once a darling with Wall Street. It was in the blue chip category for many, many years. The high on this stock in the past 52 weeks is $30.06. So an entry level around this point right now in the $3 price range, because once it breaks that $5 mark, more than likely institutions will be reacquiring it again, those who have not already been in it from the investment standpoint. Recent news out by Bloomberg and Dow Jones today. Overall, they have missed their previous credit line payments with bondholders, so that had affected the stock significantly. However, they recently, I think today, they came out with the announcement. Let's see, Bed Bath and Beyond announces completion of public equity offering and public strategy update. Let's see. They've raised over $225 million approximately in the offering and expect to receive an additional $800 million of gross proceed in future installments, assuming certain conditions are met. Basically, they have to pay down a lot of debt that they have right now. They have been closing stores to cut the overhead expenses, but they've made some significant adjustments. And one of those adjustments that I think is a very positive adjustment is the new financial officers that they have brought on board to overlook the company. This is a brief by Reuters. Bed Bath & Beyond Inc. appoints Holly Etlin, interim chief financial officer. This was yesterday, February 6th. And Laura Crossan will resume her role as the company's senior vice president of finance and chief accounting officer. She will continue, excuse me, as the company's principal financial and accounting officer for the firm. So with regard to possible speculative investment play, long-term, Bed Bath & Beyond, I think, is an excellent play. BBBY is the symbol. And obviously, uh, AIRI is another potential, and this is in the crypto market. This is another tremendous play. Obviously, this would uh, be pushed by the cryptocurrency and AI technology that is getting a buzz. And the more right now we're dealing with Chat GP3 3, there's 4 coming out, and also 5 getting to roll out. So a lot of news is coming out with this whole Chat GPT AI technology. And more than likely, as we come into the summer, we can see a lot of money being put towards these technologies. And potentially, you can see these tokens acquiring a lot of value. The big story of the day, Adani, Adani Group Holdings. They've been losing billions and billions of dollars recently, and it's having a significant effect on the market. Let me see if I have a screen up for Adani. I'd like to bring that up so you guys can see what's going on. I thought I had that available already. Okay. Well, for the moment, we'll just go with this brief Bloomberg commentary. Let me bring that up. Bear with me 1 second. Okay, Mobius is a really big investment firm, and many people watch their strategies and how they play the market in terms of long-term investment strategies. And this is a commentary from Bloomberg Television, and the CEO is about to speak on this. So I'm going to bring this up so you guys can take a look and listen to what they have to say with regard to this Adani fallout.
Sale. Can you tell us why not?
It's all about debt. I mean, the company and its associates are heavily in debt, and that's what sort of scared us away. In addition, we usually concentrate on smaller companies, but in any case, the real issue was this.
Mark, are you still there? We seem to have lost you.
The Indian market is big, and it's very interesting, you know.
Mark, is this an India problem or is this an Adani problem?
It's an Adani problem. India is going to still go from strength to strength. It's an incredible country, incredible prospects, high growth, young population. So I think it's just one of the typical scandals that you get in capital markets, and it'll pass. Let's put it that way.
Mark, where's the risk to contagion that you see? I mean, we see banks saying we're not going to accept debt or stock as collateral from other investors. Like, is there a potential contagion effect?
Well, of course, the banks are now going to be much more cautious as a result of this, and that will impact some of the highly indebted companies. But those companies that have strong balance sheets and low debt will do very well, will continue to do well. You know, in any story like this, there are always winners and losers, and there'll be winners, that's for sure.
And that's one of the things that I think is very important with regard to my approach to how I will be looking at the market, because wherever there is, how can I say it? Wherever there's volatility, and specifically when certain companies take big dips in the market, whether it's a debt issue, whether it's a restructuring issue, especially when these are blue chip, well-established companies, you're usually looking at a buying opportunity when the dust settles. Right now, this stock, Adani, is going to be affected primarily for a while. It's going to be under pressure. But for those of you who are looking to acquire a top blue chip stock over the long term, if you're investing over the long term and you've got some capital to set aside, you will be able to take advantage. You'll be able to take advantage of this opportunity when the time is right. And you can, put it in your portfolio on your watch list so you can keep track of it and see where it's trading. Trades as an ADR. So that's buying foreign stock that trades outside of the United States and on the New York Stock Exchange as well. Okay. There's another program I'd like for us to get a little more background on. And this is a little longer video. I'm not going to play the entire video, but I think there's much here to really unpack because Adani is an Indian owned company. So looking from it from the perspective of the analysts in India and knowing the vast impact of which Adani Holdings currently where it's based in India, it's similar to like maybe, let's say, Google, Microsoft, or Time Warner in the United States, AT&T. It's one of those type of companies that covers several different industries. And because of that, its performance or lack thereof can have significant effect, not only as a company, but definitely in the country of India as well. So let me bring that up and have you guys listen in on some of the commentary as it pertains to Adani.
Person in the world. But as we speak, he's been struggling with an unprecedented crisis. While Adani's businesses have lost more than $100 billion in barely a week, Adani himself has lost around, $57 billion in personal wealth, dropping out of the top 20 list in the richest people in the world. Also, his group is facing one of the biggest stock market sell-offs in the history of India. I don't think this sort of a drop in just a week has been seen in a long, long time, if ever. Now, the obvious question that many of you have been asking is, how did all of this happen? What is the fine print? What lay behind all of this? And we'll try and explain some of that to you. Essentially, it's a David and Goliath story. The story of a little-known firm taking on one of the richest and most powerful men in the world. This firm has accused Adani of market manipulation. Its name is Hindenburg Research. Hindenburg, well, it's a small New York-based research and trading firm founded by a rather well-known by now short seller named Nathan Anderson. Neither the man nor his company has been particularly well-known until recently, except when they started coming out and taking down a large number of companies. Nikola was one of its most recent scalps. Now, before I go any further, I think I should tell you what exactly it's short selling. Well, normally, you buy shares in a company hoping that it's going to go up. A short seller sells shares or bonds in the hope that their prices will go down. There are all sorts of technicalities in how this can actually be done, which I'm not going to weary you with right now. So the long and the short of it is that Hindenburg Research took short positions on the Adani Group, or to be more specific, short positions in some of the bonds of the Adani Group, betting that their prices will essentially go down. And then on the 25th of January, Hindenburg Research published a 100-page report. It accused Adani of, quote, pulling the largest con in corporate history, unquote. The report said, quote, Adani used a web of offshore shell companies in tax havens to inflate revenue and stock prices, even as debt kept piling up. All of that basically meant that the Hindenburg Research was saying that the Adani Group was not worth what it was, and it was also saying that there were several irregularities. Was Hindenburg correct? Correct? Well, absolutely not, said the Adani Group, coming out with its own 413-page rebuttal and saying that all of this was nothing but an attack on India. Don't wrap yourself in the national flag by looting the country, replied Hindenburg, and the story continued. So who's right in all of this? Well, obviously, these are matters that will be eventually decided by regulators and market authorities and perhaps even the courts if there is a libel action and somebody sues Hindenburg. But in the short term, if the intent of Hindenburg was to profit from a drop in the value of Adani companies, then boy, did they rake in and did they cash in? Because down went the value of the Adani Group after the publication of that report, and in a dramatic fashion. Between the 25th of January and now, Adani Group shares have fallen like a pack of cards, a pile of rocks, call it what you will. This is an unprecedented collapse. This is the Adani Group's website. It says the Adani Group has businesses across sectors. In which areas? Well, just about everything. Energy and utilities in particular, but also transportation, logistics, defense is there, incubation is there, airports, materials, hydrogen, green hydrogen, among others. There are a large number of sectors that the Adani Group is in, virtually every sector, if you really care to think about it. Now let's look at the companies, which include some of the recently acquired companies, cement giants like ACC and
I'm muted. I apologize. 4:35, that's about 5 minutes ago. Okay, let me kind of backtrack a second. I'm not sure if you're able to hear me earlier. Sorry about that, Rashad. Thank you for showing up. Much appreciated. With regard to Adani, they've been losing, like I said, I'm not sure if you heard what I spoke about with regard to short position. If you heard my commentary on that, please go ahead and let me know so I don't have to repeat it to you. But there were several things with regard to this company when Hindenburg Research came out and dropped their 100-page report. In the bond market, you really can't short bonds per se in terms of like you do it in the stock market. In the stock market, you can do what's called put options, which means you can't afford to short the stock, go on margin. What you can do is buy puts, which will act in a very similar way. They'll be priced at a much lesser price than the actual stock price. If the stock is trading at 30, 40, 50, or even $100 or higher, the options may be traded depending on the month that you purchase, how far a month out, because options are sold. Let's say right now you will have February options will be very high, but March, April, May, June. If someone bought June options on Adani a month ago, they might have been 50 cents, 25 cents, $1. And those same options now could be trading at $10, $15, $20 if you bought the put options, right? So options are basically a cheaper way to be able to enter the market and play. It's short-term play. It's a form of trading, but you can take advantage of the market or particular stocks in the market, I should say, when either news come out there may be talks about particular issues going on with the company, whereby you can look for investment opportunity or trade opportunities to take advantage of. So the put options, obviously anyone who may have bought put options on Adani, they're doing well. But arbitrage is a technique where there's specific companies, they're like institutions, they're big companies, and they're able to come in and short the company's stock, or in this case, the bond market, and they were able to capitalize on their report where they reported that they may have been cooking the books, or there may have been something not correct with what Adani was showing in all of their financials. Because of that, many people after reading that report was selling the stock. Institutions, everybody was dumping it. And because of that, the company took a big hit. They lost billions. I think over 20 billions right now they have lost. Actually, the owner of the company, I think he lost close to $60 billion, Mr. Adani and his family. The company may be down significantly more than that. It could be as much as 60 billion as of, I think, yesterday's market closing. But I have to verify that. But in any way, We On News, they're an Indian-based company. So I went to them to look at it because they can give me more exact information with regard to a company that is a well-established company in their country, which is similar to like a Microsoft, Google, let's see, Time Warner, Comcast, AT&T, companies like that in the United States who have a very large footprint in the economy of the U.S. And if it was to be coming up with really bad earnings or something was to happen where the company looked like it could go bankrupt, potentially the government would have to step in like it had done in several years, 2008, 2009, and then 2000, 2001, when we had September 11th issue with the falling of the Twin Towers and how that affected the financial markets back then. So this is something pretty much similar to Adani because their footprint in the economy of the country is so wide. They're in transportation, they're in port operations, they're in banking, they're in finance, they're in energy, which is both renewed energy and oil, petrochemicals. So they cover a very large part of the market. And because they cover such a large part of the market, I'm not sure what percentage of GDP this company may actually affect. I should have looked at that through Forbes, but I didn't get a chance to do that research. Tomorrow, I might make it as a footnote for tomorrow's show. But with their footprint in the economy of India, this could affect the growth projections for India for 2023. So let's continue.
In Gujarat, Ambuja Cements, and of course the media company NDTV. When you look at the major companies, first there's the flagship Adani Enterprises, which has been at the center of all of these headlines in the last 1 week because of that FPO, which was subsequently called out. Adani Enterprises deals with natural resources, with defense, with aerospace, even airports. It incubates many of the Adani Group's companies. The Adani Group, under the banner Adani Airports, for example, has won the mandate to modernize and operate at least 6 Indian airports. You then have Adani Ports in SEZ Limited. SEZ stands for Special Economic Zones. This company manages ports, terminals, and logistics. Then there's Adani Green Energy Limited, which claims to be the global #1 solar power generation asset owner. There's Adani Total Gas Limited, which sells PNG or piped natural gas to commercial and residential establishments. Also CNG or compressed natural gas to India's transport sector. And then there's Adani Transmission Limited, and there's Adani Power Limited. Basically, you get the general idea. This group has a vast range of interests. There's another company that deals with cooking oil. They're now listed companies, 2 of them, as I said, in cement and NDTV in the media. Real estate is also somewhere in there. Now, all of these companies are listed. They are public. Adani Enterprises were the first to be publicly listed. Others followed, with Adani Wilmar being the latest edition. Its IPO was in January 2022. Essentially, one of the very important things to be noted is that because these companies are listed and they are public, they are subject to public scrutiny and also the scrutiny of regulators such as SEBI. However, one of the things that needs to be noted also is that their ownership or their public float is somewhat small. Not too many of their shares are owned by either the public or by mutual funds, and that is one of the things that Hindenburg Research has been pointing to. Having a very small float can mean that the prices can rise very fast. It can also mean, as we've been seeing in the last 1 week, prices can drop very fast. That's one of the important things to keep in mind as you discuss the Adani Group.
Okay. And that's something that was very interesting that he brought out that I was not aware of. When you have publicly traded companies that are listed on various exchanges around the world, the float or the capital stock that are available for trading, where the public, whether it's investors, you and I, or investment companies such as mutual funds and so forth, can invest in them. Pension funds, whatever it might be, whether it's the police union, the firefighters pension fund, school teachers pension fund, different type of public organizations that may want to invest their large sums of money from collecting their dues from their employees that they can invest to make their pension grow so they can offer, obviously, the employees a better percentage in their pension when they do retire. By them having a small float, what he is referring to is that not many people, investors, public shareholders, or whether it be institutions or whether it be individual high net worth investors, own much of the shares. Most of it is private. And because most of it is private, that creates a liquidity issue. Liquidity issue means that small buying can send the prices up big. And likewise, selling, any type of selling, significant because the float is small or the volume, most people would say, is small, that also can trigger a sell-off. Obviously, what he's leading into, I'm not sure if he's going to get into the whole thing because I didn't watch the entire video, but more than likely what they're speculating is that there was something going on with the internal numbers and on the shares that were not outstanding, shares that are private, as opposed to shares that are outstanding to the public that the public can purchase. And with those shares, they may have been recording the numbers in such a way to make their overall performance look extremely strong. And that may have gone on for some time. And now, because of private research, went and took a look at the company real close under scrutiny, they may have brought out issues that investors now are looking at and say, wait a minute. See, it's one thing buying the shares. It's another thing with the bonds. And that's something I'm going to talk about more as the channel becomes more publicly known and aware, is how to take advantage of the bond market. Because the stock market obviously has a lot of volatility. But as a bond investor, you are a creditor. So in any default of a company, creditors are first in line to be paid before any common stockholders, shareholders, and so forth, right? But obviously the bond market is a very pricey market, significantly bigger than the equity market or stock market. But also, if you start buying bonds when you're young or for your children, you can amass a lot. And another part of bonds that you can benefit from, which I will talk about in subsequent shows to come, is the strips. When you buy a bond, some bonds have, and I'm going to focus on corporate bonds as opposed to municipal bonds. Municipal bonds are government bonds, right? But corporate bonds usually give you a higher interest rate. And with that interest rate bond, that usually gives you the opportunity to, in the future, be able to sell or trade those strips, sell them off if you want to be able to trade them. And some people, depending on how much bonds they have a couple of $1 million in bonds, they could just survive off the interest on the strips. So if they get a corporate bond that's giving you 8% return a year, and you've got a couple of million at 8% return, you can easily live off of that, depending on what your overall expenses are, accumulative based on your other passive incomes that you may have available as well. Let's continue.
Group, what is the free float of many of their companies. Now, as Adani supporters have been saying, whatever you may say about stock gyrations up and down, there are many companies in there and many of them are solid businesses. There's annuity income in sectors like infrastructure. Even Hindenburg in its report didn't exactly argue with the fact that many of these businesses may have some value in them or they're doing solid businesses. The essential Hindenburg question was on valuation, and in particular, the meteoric rise of Adani Group shares in the last 2 to 3 years, and whether that small float had a major impact in that. Let's just take a look at a couple of examples. This, for example, is Adani Enterprise. By November 2022, that is what had happened. Look at where the stock price was just 3, 4, 5 years ago, even a couple of years ago, and then it was 4,000 rupees, give or take, in November 2022. And this is a pattern that you will see in Adani share after Adani share. If you look at all of these companies, in the last 2 years, they have seen a massive rise in their prices. And then after the Hindenburg research is out, that has all suddenly come crashing down. It's still not come all the way down to where the companies were just a couple of years ago. So let's remember that. Even after this carnage we've seen, most Adani Group companies are still substantially higher than where they were even in 2019 or 2020. Okay, so what does all of this mean for the Adani Group? What does it mean for India? What does it mean for the world? And what does it mean for Gautam Adani? Well, let's just start with the world part of it. By the way, there are some international repercussions that are already starting to be felt. We've just heard, for example, that Joe Johnson, the brother of Boris Johnson, has just quit as a director in a company that has some links with, it's been named in the Hindenburg research, also Elara Capital. There's been some talk about its exact association with Adani Group companies. Joe Johnson has just resigned from there. And that is just one of the many things that you could see in other parts of the world. When you have a crash like this or a major crisis like this, there's almost invariably going to be some international repercussions. But let's just come to some of the other questions we should be keeping in mind as we track the Adani saga over the next week, 2 weeks, or 3 weeks. Question number one is around the value of the stocks. Now, quite frankly, the stock markets aren't necessarily the best judges of anything. You can have stock prices going up way more than they deserve. Then you can have stock prices falling again way below what they deserve. Stock market gyrations will be there. And the Adani Group essentially and the Hindenburg are going to be arguing a little bit only about stock valuations. Adani Group's been saying we are championing growth with goodness. Hindenburg says that the growth is all gas, essentially. Hindenburg has won round one when it comes to stock prices. Is it now going to book profits and move on, or is there a longer battle ahead? So that's question one. Question two, what do the regulators make of all of this? And perhaps to the risk to other institutions in India, to banks that could be exposed, to the LIC and so on and so forth. That's why earlier this week, India's market regulator reportedly began probing this fall in shares. India's central bank decided to look into the exposure that Indian banks have to the Adani Group. Lenders to the Adani Group, by the way, include Punjab National Bank, IndusInd Bank, among many others. Question four, will there be any contagion in terms of credit risk generally in India? Is there any risk to the Indian economy? Are people going to say, well, we are worried about the Adani Group? Like we've seen, for example, units of Credit Suisse Group or Citi have stopped taking certain Adani-linked collateral. Is that going to become a broader question around India? Most experts think it is really unlikely, but I think that is something that needs to be watched. Are other Indian companies going to be facing any problems because of whatever is happening in Adani? If you look at the stock market, by the way, nothing has happened to other Indian companies. It's largely been Adani Group companies only falling. There's been no contagion elsewhere. Question number five, what does this entire fracas mean for the actual businesses in the Adani Group? Are they going to continue to grow? Is there going to be a financial crisis? Is there going to be a real effect because of whatever's happening in the stock market? Now, Gautam Adani had to pull a stock sale worth $2.5 billion at the 11th hour. This was after the offer was fully subscribed. Here is what Gautam Adani himself has had to say about all of this.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. In my humble journey of over 4 decades as an entrepreneur, I have been blessed to receive overwhelming support from all stakeholders and particularly the investor community.
So let's put all of these questions now to Mark Matthews, who is the Managing Director of Julius Baer, joining us from Singapore. Welcome to the show, Mark. Thank you so much for joining us. You know, as somebody who runs Julius Baer, I'm sure it must be almost personally hurting you when somebody loses, what is it, 40 or 50 billion dollars of wealth in something like a week, which is what has happened to Gautam Adani.
It doesn't hurt me personally. It's not my money, but you're right. It's a lot of money.
What do you make of this entire thing? The sort of selling that we have seen in the last 1 week is massive. What is your take on the overall situation, Mark?
Well, on the one hand, I'm glad these sorts of short-selling research houses exist because they do write negative research, which the investment banks are usually very reluctant to do. But on the other hand, they can create sort of witch hunts and panic situations. And I think we're in a little bit like one of those now. The market has clearly panicked, and everything in India seems to be guilty until proven innocent. And I actually think that presents many opportunities. They seem to be being taken advantage of now. I'm looking at the price action. A lot of things are rebounding. So anyway, I think it'll prove to be a.
Okay, let me stop right there for a quick second. And this is what I was talking about with regard to how I want to approach the market as a commentator. I want to look at businesses whereby you are, as an investor, whether you're a black investor, a black man that is up and coming, and you've got disposable capital for investing, or any other type of investor, whether you're a successful, established, high net worth investor already. Volatility always lends opportunities to pick up very good companies at cheap prices. And sometimes these type of report by Hindenburg Research, like the gentleman said earlier, what's his name, Mark Matthews, he said sometimes they may write these reports and they're writing a negatively based perspective. It's an opinion based on the way the company may be structured. It may not necessarily mean that anything is wrong with the business, but just from the numbers perspective, when the number crunchers institutions look at it, they may say, you know what, maybe I'm too overly leveraged in this particular investment. So people might start taking their capital out just to be safe. And because of that, we've seen, and I did say that I think it was more than 20 billion. I just saw the number flash across the screen. It's over $107 billion they have lost this week. So for those of you who are liquid or cash liquid, this company and its various divisions shows great opportunity to be able to go in and purchase what is potentially, what is actually a blue chip ranked stock at basically, bottom prices right now. You can literally get in cheap. And if you're buying it as an ADR, I'm not sure what the ADR pricing are trading right now, but I think the rupees is somewhere around 71 to 73 rupees per US dollar. So you can do the conversion if the stock is trading in the Indian market at 1,531 rupees. You do the dollar conversion to that, you're looking at about maybe $21. So I'm not sure if you are capable of buying 100 shares minimum at $21, but there's some trade platforms that allow you to trade fractional shares. Matter of fact, I think by next week, I will be having a link to one of the major trade platforms that you can use. It's a US-based trade platform that allow you to trade not only options, but virtually every particular stock around the world. You have to be approved for it, but around the world. And also you can trade fractional shares. So you can purchase fractions of it, pretty much like when people were buying into Bitcoin. You couldn't afford to buy a single coin at 60,000, but you could buy fractional shares. You could go in and put up 1,000, 10,000, 5,000, and you'll get fractional ownership based on the investment that you make. So this is where I want to be able to focus on, is where buying opportunities presents itself. Like I said earlier, Bed Bath and Beyond, BBBY, I think presents a long-term purchase situation to be able to go in and invest, because right now you're looking at a company, I think overall structural management is strong and it's trading at 10 times multiples where it traded a year ago, which is around $3 now versus $30 a year ago. The company is very well capitalized, well over $300 million. They just did it underwriting for $1 billion to pay off their debt. They already came in with $225 million in cash, and expect to get the other 800 million over the next few weeks to pay off additional debts. So when they come out of this, they're going to be management strong and capital strong, and they're going to be lean and mean because they have cut a lot of unnecessary stores that weren't profitable to be able to have only the profitable markets where they will be selling from. So that's going to be a very good opportunities for guys who are looking at good investment opportunities to put your money in so your money can work for you. You know, I believe in usually looking at good companies that you could get at cheap prices. Very much so what happening with Adani right now is very similar as well. Adani, I think for those of you who may be looking at being able to buy the bonds, the ADRs, or if you can purchase the stock itself, which is trading on a New York Stock Exchange, you could go in and pick those up at very good prices. And Adani is going to be hard for that company to fall because it's so infrastructurally bound to the economy of India. The mere fact that the Central Bank of India has to step in to do an evaluation of all the other financial institutions to make sure they're not overly leveraged, that's critical. It's a preventative measure, and it may be just a cursory measure because it would be foolhardy on their part to not at least review the financials of their banks and see how much those banks within the country may be leveraged in terms of buying the debt of that Adani corporation, right? When you buy debt, you buy bonds. So that's what they're going to be looking at to see how exposed they may be. Just to give a couple of guys in the chat, welcome. Chris M., welcome to the show. Glad you could join us. Yeah, I went to the gym early. I spent a couple of hours myself this morning. I'm going to go tomorrow at 8 so I can be back more than early enough to make sure I can get all the research I need to get done besides what I'll do after the show today to bring you guys the best material I can day by day. What's that? HR, go ahead and see if you can wrench up Chris at this time. I think there was an issue earlier which you've been able to do so while he's live in the chat. Why don't you go ahead and take care of that for him? Thank you very much. Let's go ahead and watch the finishing of this this commentary by Mark Matthews from Jules Bank or Jules Bears Bank. Singapore market is also another market, I think, and I'm going to get into this much later, maybe in the next couple of months. But I'm definitely looking at the Singapore market because years ago, a lot of people used to look at the Hong Kong market. But since China has come and pretty much take control of Hong Kong, a lot of people have been, sitting on the sidelines with regard to major investments there. But Singapore has been independently, even though it's part of the province of China. China have allowed Singapore to operate very independently, and their banking is extremely strong. So as we go further and I develop this show, there's some things that I want to talk to you guys about when it comes to maybe offshore banking and things of that nature, that I'll do that and probably through a Patreon where I could be more forthcoming and talking about things that may not be for me to openly disclose on YouTube. So let's go back to the show and finish it up. We're almost
A storm in a teacup longer term.
Mark, you seem to be saying you think it's going to be a storm in a teacup. So you think this is a temporary issue that has happened, and for Gautam Adani and the Adani Group, I'll come to India itself in a couple of minutes, but for the Adani Group, you're saying this is a storm in a teacup, and eventually the companies will do well and the stock market will recover and things will get back to normal. Is that what you're saying?
Well, that's several different things. The stock market will do well, that I do know. As for the Adani Group, I personally think that the company is not going to disappear. It's got some very big and good quality assets. It's got good sponsors. It has cash. Yes, it has a lot of debt, but it also has cash.
Mark, I think if I can paraphrase what you're saying, and this is what many experts have also been saying to me in the last 3 or 4 days, there are some solid businesses in the Adani Group. They own a lot of assets, and as a result of that, you can't say that there is no value in there. The question, of course, is the valuation. Were they overvalued a week or 10 days ago or a year ago? Are they undervalued now? That's a question of price, which has to be determined at the stock market. And no one is completely clear as to what the correct valuation is, but there are some solid businesses in there. Is that what I heard you say?
100%.
All right, elaborate to that, because with this sort of price discovery can be quite painful, right? 50%.
Let me
down in a
elaborate
week.
on that for one quick second.
Yes, and another problem.
I like that response because it was quick and right to the point, no elaboration. He interpreted the information accurately. Definitely many sector of its business, Adani's business, because it's a group holdings, there are many sectors of the company that are independently structured and operated, and it seems that they're cash strong. There is a possibility, I mean, if that company existed in the US, senators in the US right now would be calling for that company to be broken up. Similarly to, I think, I'm not sure. There's a company in the US right now that they're talking about decoupling. I'm not sure if it's Google or one of these big major companies, but there is talks about breaking up certain companies when they get too big and they have too much control in the society, where they can have an overabundance of influence and can affect the market and consumer and so much things of that nature. So there could be possibilities that the Adani Group you may see some sell-off of certain parts of its sector, where either foreign investment may come in and buy up parts of the company, and they may either change the name or they may become major shareholders, where they may own a significant stake of the company, possibly up to more than a major stakeholder, where Adani may no longer be the primary major stakeholder in the company. So that might be something that come out of this fallout. But the opportunity, if you're able to invest and buy into it now, anything like that may happen in the future is only going to be better for the market, better for the company, and obviously for any investors who invest pre those announcements. Okay.
Another problem is that the investment banks really don't cover these companies, very few of them. So it's hard to know really what the correct valuation should be. There's not a lot of research on these companies, and that does make the price discovery more difficult.
That actually is one of the things that was picked up by Hindenburg. They almost had it as a black mark against the group, saying, here you have a $150, $200 billion group, and why is there no research on it? Does that happen in your experience, that it can happen that sometimes a group can rise very fast and there's not much research on it?
Oh, yes. And the reason why is obvious. It's because the free float is small. And so there weren't a lot of institutions. Obviously, research is written for institutional investors. There weren't a lot of institutional investors who owned it or who own it now. And that's why we don't have the same depth of research that we do in the more widely held companies.
All right. Thank you so much, Mark, for joining us. Such a pleasure.
Thank you.
And for another perspective on that really big story this week, I'm now being joined by a well-known market analyst, Hemendra Hazari. Hemendra, thank you so much for joining us.
Well, let me just make a note. I'm not sure if you guys saw that commentary going across the ticker where it talked about the Hindenburg effect. Ironically, the research company is called the Hindenburg, and we know what happened at the turn of the century, back in the early 19th century, with the Hindenburg and the balloon type air vessels that were trying to be developed in parallel to airplanes. And we saw how the extreme risk and the death potential of loss of life with those type of air flight vehicles, that you literally, everybody would just can die and die a horrible death from a vehicle like that falling out of the sky. And that the risk was far greater than they were to regular airplanes. So I would just wanted to kind of make a note of that, that this Hindenburg Research Group wrote a report that literally brought Adani down. I mean, it came down in fire. If you looked at the chart earlier of how the stock just dropped, fell like a rock. You know, the reporter there, the announcer was trying to get an analogy, but in on Wall Street, we'll say, you know, it fell like a rock, and trying to pick the price and when to go in and buy it is usually like what we would say is catching a falling knife. You know, you're going to catch the blade, you're going to bleed, there's going to be some pain. You know, so what I would suggest, you know, as a commentator and an observer of the market, what I would say is wait until the dust settles, and that's going to happen fairly quickly. And within the next week or two, whatever fallout is going to be, it's going to come out. If there's more to come out, then that's going to come out as well, because as regulators take a quick look, SEC is going to take a quick look because it trades in the United States. The central banks of India is going to take a quick look. They're going to be investors who currently own it, and the institutions that are in it, they're going to be taking a quick look. So a lot of people are going to be taking scrutiny at the overall group and then with the individual companies that are part of the group. And more than likely, the individual companies will probably survive well. But the primary group may be where some restructuring may actually take place. So let's go back and hear some final comments before we end the show.
Joining us on this program. Just wanted to understand, we can discuss what's happening on the fundamentals of the Adani group and where that's going and what that means for India. But first of all, the stock market crash that we have seen in Adani Group's shares. Do you think it's gone on long enough? Many stocks are still locked on down circuit, like Total Gas and Transmission and Power. One or two of them are still on downward circuit. Adani Enterprises has seen a lot of volatility. It was down 25-30%, bounced all the way back up. What do you think is going to happen to the stock prices here?
One must bear in mind that the increase in the Adani Group share prices in the last 2 years has been spectacular.
Yeah.
On average, I think they've increased by about 819%. So if one assumes that the normal price was before it started its rise, then we really don't know where the bottom and where the normalized price range should be. Because it has to be remembered that the Adani Group, which are listed, they have very limited floating stock. Indeed, one of the objectives of the follow-on public issue was to broaden the investor base and to get retail investors in. So when the rise has been so spectacular, the fall can also be equally spectacular. So that is what has to be considered by investors before they take a decision whether to buy or to sell the stocks.
I think you're making a very important point, Mr. Hazari, and I just want to make sure I understand that. You were referring to that a little earlier as well. When there's a small float, when there's a thin float, it is possible you can have stock prices jumping up 8 times, 10 times, 20 times, and we have seen that in Adani Group's shares in the last 2 years. That same thin float means that you could be having this sort of a 50-60% drop in a very short period of time because there's not enough float in the market. Is that essentially what you're saying?
Correct. But one has to see that in this decline that we are seeing currently, that the volumes are massive. See, because earlier the volumes when it was rising were not so massive. Now there is a lot of, whether it must be speculator interest, but it is coming down with very heavy volumes. So it tells you that there is a genuine push there to push the share prices down.
It's often said that whatever happens at a stock market is not often connected with the actual, how the companies are positioned and how well they're running their businesses and how solid the businesses are. Stock prices can gyrate out of sync with that. Do you think the companies themselves could come under stress right now, repaying loans, raising more money? Does all of that get affected by a stock market crisis if it's a purely stock market crisis?
Most definitely, yes. Because when the stock prices was going up spectacularly, there was really no fundamental reason why these stocks were going up. But because of the Hindenburg report, there are justifiable concerns, and the Hindenburg report is very specific. It is backed by and supported by documentation. So today there are significant concerns which can cause the share price to come down, because there are corporate governance concerns, there are fundamental concerns. And when the share prices and the bond prices collapse like the way they are, that means for these companies, the capital market doors have been slammed shut, and they need, liquidity to manage their day-to-day operations, as well as to manage and to fund their huge capital expenditure plans. In my view, all this will have to be curtailed, because today only the Indian government banks can handhold the company when they need liquidity. Also, there is a lot of concern that if these Indian government banks increase their exposures, their own bank shares will start, collapsing. So therefore, it is absolutely important that Adani Group now consolidate, they give up on their major capex plans, and they may even start considering divesting their assets, because today for them, liquidity takes precedence over growth.
All right, Mr. Hemant Hazari, thank you so much for joining us with that perspective. Thanks a lot.
Wow, that's incredible. That's exactly what I was starting to talk about, if you guys were picking up. He said they may have to start consolidating assets. He says that basically, in other words, the central bank, like the Fed works in the United States, can't give them money. The only way they could get money would be from the other banks of India. And if the banks of India start buying their debt, their particular banks may start to lose confidence in the market, and their shares may go down. So that's a big issue. And the liquidation, meaning that they may actually have to sell off some of the assets that they own. And more than likely, there are two potential buyers that's going to be in the market: US buyers, Chinese buyers. The Indians, I think they're going to lead more towards US buyers, because they already have tentative military situation going on with disputes with several islands over there in the Indian Ocean with China. And because they've got a military issue going on with China, they may not want China owning significant assets such as ports, air, terminals for airlines, energy, transportation, infrastructure development. All these different assets that they currently own right now could be significant, and they would probably prefer what they would consider a friendly outside investor to come in and take possession, or at least a major stake in some of these assets, as opposed to China, who they may see more as adversarial in the overall global scheme of things, even though both India and China, as part of the BRICS financial infrastructure for their global structure that they're setting up in the East, which includes Russia, South Africa, Brazil, India, and China. Also, Saudi Arabia, and I'll talk about this in weeks to come, Saudi Arabia wants to join BRICS as well, and there's several other countries that are looking to join that may actually get fast-tracked. And I think if there is a country that will get fast-tracked, would be Saudi Arabia. And if that happens, that could affect the U.S. really big, because the U.S. dollar is also known as the petrodollar. And if Saudi Arabia goes into BRICS, they will become a basket of currencies as opposed to one currency, which means governments or countries overseas who buy oil don't have to buy in dollars anymore, which means their central bank don't have to hold U.S. dollars in their accounts. So that's going to be a big effect with regards to the U.S. dollar and what could happen midsummer with regard to the U.S. as well, if Saudi Arabia does join 2023 or even 2024 BRICS. So I want to come to the end of our show today. I covered a lot. There were a lot of things that I wanted to talk about that was significantly more. There were some things on the political side, but I figured I'll leave that for a different day. Obviously, tomorrow I will make some commentary with regard to Biden's State of the Union's address that he's going to do tonight. So I'm going to have to stay up and watch that, make some commentary notes that I may want to highlight. And of course, the rebuttal from the Republicans that they're going to have on how they address whatever Biden has to say, because that's going to be, like the State of the Union address is really the game plan for the president on how he's looking and where he's looking to take the country, the next 2 years until 2024, where we're looking at elections. So there's going to be a lot going on coming for this year, this summer. It's going to be hot. It's going to be opportunities for making money, but there's also going to be a lot of blood in the streets as well. And hopefully that's just a Wall Street saying in terms of money being lost or a volatile market, as opposed to something more sinister happening in the U.S. So with that, Sage Talking Business, this is the end of our show today. Tomorrow, let's look forward to the same time, 4 o'clock Central Standard Time. The show will start at some point, probably for next month. I want to be doing a full week worth of shows, Monday through Friday. Right now, I'm only doing 3 days a week, Tuesday, Wednesday, and Thursday. So see you guys tomorrow. Looking forward. This is Sage Talking Business. See you guys later. Have a good one.